is Avijit Chatterjee recording a weekly session of Chartsarefun. This is for the week of July 20th, recording this in the evening of July 26th. Our blog site is chartsarefun.substack.com, and our YouTube channel is also at Chartsarefun. We do believe these are tremendous fun insights in the charts. We don't share investment advice. We're not registered investment advisors. Our goal here is to really share these fun technical analysis-based chart patterns. Today, we're going to talk about a key week ahead with the FOMC's rate cut decision or a rate hike decision. They meet once every 6 weeks. So the next meeting is the end of the month, July 28th and 29th. Chair Kevin Warsh's second press meeting. He's got a communication stance that he does not believe in giving constant commentary or guidance to the market about rates or, for that matter, economic indicators. So he will, market hence, will patiently watching to hear what he says at the FOMC press meeting after 2:30 on the 29th. That said, a key indicator of inflation that you could see from the long-term treasury, this is the 10-year treasury market, TNX, seems to have broken out of a pennant pattern. A pennant pattern typically forms like when you have declining highs and rising lows. This is a long term. This is a weekly chart over the last 4 years. And you can see that this pennant pattern, there was a breakout that was a fake out that happened after April when the market just had started climbing out. And then it pulled back to the, below that pennant. And then this was the week that we just finished where the pennant breakout happened with the candle closing near 4.68% in 10-year yield. If this turns out to be a breakout above that 4.8%, which is a key resistance that we last saw beginning of 2025, a 3.6 to a 4.8 is a 1.2. Add that to 4.8, that's 6%. A 6% 10-year yield, you can bet, will raise a lot of concerns in the market because a lot of the small caps, a lot of the startups, the AI companies need to raise funds to power their incredible AI data center expansion and so on. So that will shake up the market. So that's to be seen if this was yet another fake out kind of a breakout. And next week, if you do get not as hawkish Chair Kevin Warsh, maybe the 10-year yield pulls back down. But if it doesn't and the breakout continues and it starts climbing momentum, that will be bearish for the market. So this is something we are definitely going to watch next week. We can know that Kevin Warsh in his first press conference clearly said that he's going to appoint task forces for a variety of different things. They have a huge balance sheet, close to over 7 trillion of treasuries and papers that they hold that they will try to reduce, which means at some point there will be treasury selling going on from the Fed. That part, the task force will make determination on how that happens. If it gives any clarity on that, could put some downward pressure on treasuries, which could mean the yields could climb. He also made a clear directional statement that FOMC has two mandates. They have price stability, and then they also have the mandate on employment. He's not so worried about employment at this point. It's holding steady. Unemployment has not crept up a lot. So he's not as worried about the employment picture. He definitely said that their price stability mandate is key in his mind. They have, for the longest of time, missed the 2% inflation target, and he wants to focus on that. He wants to look at key predictors of that inflation, key attributes that measure that inflation. So he's not going to just look at core and the way people look at CPI, the core, without the food and energy, but he's going to kind of take out some of the key drivers of inflation, rent, or any other attributes that are stickier, and going to start focusing on those as where are they trending and how can FOMC with its tools help control that. Another key thing that happened last week was NASDAQ 100 broke down below a very key support level, which we can see right from the June level. 685.62 was the low. From there, we printed a lower high. We can see that a pattern of lower highs, and then we got a lower low. So what happened in mid-July, 685.62 got a slightly higher low at 686, but guess what happened on Friday? We printed a lower low at 682 and closed below the June low from 685.62. We closed at 684.23. So this is a breakdown from the June low, so a lower high and now a lower low indicates potentially a bearish pattern is setting up, which we have to watch, because if you look at some of the core indicators of the momentum and the breadth on the QQQ, one of them is the bullish percent index. This measures through point and figure charts. It measures what percent of the NDX is NASDAQ 100 stocks are painting bullish charts. And we can see that that had been printing lower highs since that May timeframe. So we've seen lows in the November low at 29, a low at the late March low at 30. From that 30 low of the BP, the bullish percent and NASDAQ 100, 30 went up to 68 by early May. And from there, we've been printing lower highs, 68, 66, more recently in July, 57.84. And now we have a pattern of lower lows. So in May, we got a 44 low, then we got a 35 in first part of June. Later in June, that was the lower low at 33. And then we printed a lower low at 30.39. So this pattern of lower lows, lower highs, nearing a key level of previous lows of bullish percent index near 30. So 29 was in November, 30 in March, and at 30.39 indicates the market is oversold on near term. That's something for us to look at. So a bullish percent index oversold, we can see RSI is at 31, MACD is hitting oversold levels. And then if you look at the oscillator, this is the McClellan oscillator based on market's breadth, advancers and decliners, that has also pulled back towards an oversold level. It is at minus 48.91. It's below the May low at minus 46.53. And it's nearing what we saw in the March level at minus 50. From there, we started climbing to 80. So 80% or kind of, this goes between, we rarely get, minus 80s or so. As you can see in November, it was minus 62, slightly higher low at minus 50, and we are near minus 50 already at minus 48.91 on Thursday. So oscillators oversold, bullish percent index shows, breadth kind of, bullish breadth kind of oversold, and it's a summation index, which is a bit longer term moving average that kind of gives you intermediate term peaks, had been at early May at 264, printing a set of lower highs, 264, 216, 176. That broke down last week to quite a bit, but still, it's not from RSI as oversold as it was in the November and then in the March timeframe. So here we can see RSI tends to go to the low single digits. We are still at 13.98 on the RSI. Look at the, how much of an area below the below the 30 line, the oversold level, RSI prints out in both these two. So, and that's not just like the RSI physical level, it's also the duration over kind of 3 to 4 weeks. It tends to hover around below the 30 line and then starts climbing. And when it then starts climbing is typically when market comes off an oversold level and starts having more of an intermediate term reversal. So we are yet to see, yes, it is below 30. Yes, RSI is 13.98. But typically, if you watch similar patterns as what's happened here, maybe we could get some more of another couple of weeks of decline on this from the summation index level of the NASDAQ. And even from a MACD perspective, you can see that MACD here print came as below as minus 150 or so. This turned around from just below minus 100, and now we're at minus 46. MACD still has more downside in here. That said, this week that just passed, 2 of the Max 7 earnings came out. Tesla beat their revenue, but missed on their earnings. They had huge, over 25 billion of capex guidance for the year. They are definitely investing a lot to grow their Optimus production line. This is their humanoid robots. They're also, cyber cabs are being produced in large quantities, being rolled out in multiple cities around America. That's another investment. And of course, they're investing heavily on their data center business, trying to at least grow out GPUs in the data center to power, their AI-driven growth for the company. So here, this turned out to be an inverted. While you get a cup and handle bullish pattern, this is a bearish cup and handle pattern in an inverted fashion. So you have an inverted cup, then an inverted handle. So if you see the breakout from a 453 as the top of the cup to 368 as the right brim, so that's 368 to 453. We are talking about roughly what 80 80 takes us to 448, and then another 5 points takes us to 453. So $85 or so. Subtract that from 368, you get a 283. That's where potentially the target of Tesla is. It got a big gap down on strong volume from that 368 level. We can see that it printed a level towards 313 as the low, though intraday on Friday tested a 306. So further downside can take Tesla down towards 283. Similar situation with Google. This was also an inverted cup and handle breakdown. So we can see the inverted cup here from this 333 to 404, roughly you could say 71 or so. This is 333.69. So about 70 points or so subtracted from 333 gets us to 263. That's the downside below the March low at 271. So potentially that March low 271, 270.88 from November, that could definitely be tested in Google. Downside momentum is what we got to watch for. However, on Friday, it did print a slight gain for the day, but it is below its 200 period moving average. The 200 period moving average is 322.86. It closed on Friday at 319. We got to see if it can rebound and close that gap and then start the downside movement. But something for us to watch in Google, that the technical target, if this inverted cup and handle plans out, is where it's at 263. Now, this coming week, we have one of the key largest market cap in NASDAQ is Apple. We have its earnings, and it has been having a nice bullish climb. Even with last week's sell-off in QQQ and QQQ breaking below its key on June lows, look at Apple. Apple is actually printing higher highs. It printed a higher high not too far back a week before at 334.99, it's near 335. It closed very close to it. 334.37 was the high of Friday, very close to the previous week's high, and also closed at 333 with a bullish candle. This is a bullish engulfing candle when it engulfs over the previous weeks. Sorry, this is daily. So over the previous days of candles, it engulfed and it printed a bullish engulfing candle on Friday. So if Apple has got good earnings and it breaks higher, then Apple's earnings is next Thursday. So that's the 30th of July. So if Apple breaks higher, that measured target here from a 273 to say something around 317 or so is from where it kind of cup with a slight of a handle and break out. A 273 to a 317, we're talking about $43. 43 added to 317 is 360. So there's upside in Apple. We can see that RSI is printing lower highs, so there's a bit of negative divergence, but from 333 if it can climb towards 360, being the largest weighted stock in the NASDAQ 100 in QQQ, and also the largest capped market cap company in the world. This could keep some bullish momentum in QQQ for some upside. Now, NVIDIA's earnings doesn't come out till later in August, but its chart is also looking like may want to break out higher. So we see the 214, 213.99, 214.39 is kind of a cup and then a bit of a handle and the breakout. These are higher lows, 189, 197, and on Friday it had a low at 204. That breakout about 214. So from a 189.8, say 190 to a 214, we're talking about roughly $24 added to 214. 238 is the measured target on that, which is slightly above the 236 that we saw in May. So if NVIDIA, which is the second largest company with respect to market cap in US, so after Apple, if that also has an upside breakout, now it's not because of earnings, but NVIDIA is a key beneficiary of this CapEx spending. So we're hearing big, strong CapEx spending. Google upped their CapEx spending by $15 billion. So now the 2026 CapEx spending is from 195 to 205 billion dollars. They previously had quoted 180 to 190 billion of CapEx spending. They raised it by the midpoint to $15 billion higher, and now their midpoint is about 200 billion of spending of this year. Google spending, Amazon's earnings is also coming out next week. Meta spending all directly benefits NVIDIA. So NVIDIA could break out if those CapEx spending numbers are strong from those hyperscaler companies. Finally, Microsoft its chart is what we call as a classic double bottom. If that pans out, for the double bottom to be confirmed, you need to take the tip of the W. The W is how a double bottom forms: 481, 355, 466, 349, slightly lower low, but that slightly lower low in price from 355 to a 349 had a higher low in RSI. That's bullish positive divergence. That's how markets bottom. So if this is a W-shaped double bottom, you would expect Microsoft to break above 466. Now, Microsoft near term from a 349 to a 405 or 406 is roughly, you're talking about $56 or so added to 405, takes it towards 461, towards that tip of the W, if that cup and handle breakout of Microsoft comes. Now, Microsoft did have concerns of their CapEx spending and their ROIs from the cloud growth not quite panning out with the CapEx spending. So market will watching for Azure growth, will be watching for how they are showing momentum in their AI part of the business is what market will be watching. So any bullish news there could cause also some reversal in the QQQ in the NASDAQ 100. So with three key technology companies in the Magnificent Seven, Apple with its potential breakout with a measured target towards 360, NVIDIA with its potential target measured towards 238, and Microsoft, if Microsoft does break out, Microsoft's double bottom breakout though is much higher. So if you're talking about a 350 to a 466, that's roughly 116 points added to 466. That takes us towards 582, above the previous peak of Microsoft at 550. That's only when we are able to take out the W of the double bottom at 466. Till then, near term, if this is a cup and handle breakout and the earnings is strong on Wednesday, Meta and Microsoft both have earnings on Wednesday, then this would measure towards that 461, 462, towards the tip of the W is where Microsoft would get us. So to sum it up, we just have to be cautious about NASDAQ's breakdown. We have to be worried about the 10-year yield continuing to climb. Higher yields is not good for the market. So want to watch Kevin Warsh on his FOMC presser and any indications from if they do win a surprise rate hike, that could be taking the market by a complete surprise and the bond markets would sell off and the yields would start climbing. QQQ broke down from a key level below its June low at 685 at 684. There are indicators of oversold nature. The bullish percent index is at similar levels as it was in the March low in November near 2930. The oscillator is at minus 48, close to minus 50 that it previously bottomed. And also the summation index, however, shows oversold levels with RSI at 13.9, but it has hit single digits in the past. So, and shown extended period of oversold for several weeks. We've only been minus, like below the 30 oversold level only for 2 weeks now. So another couple of weeks it could continue to stay oversold, which means there could be continued downward momentum in the market. Tesla, very bearish breakdown from an inverted cup and handle. That measured target is towards 283. It's at 313. So you're talking still about $30, another 10% or so downside in Tesla. Google or Alphabet, a similar kind of an inverted cup and handle breakdown measured towards 263. We closed at 319. So we still got, another like $56 or so of downside potentially in Alphabet if the downside continues. Apple is only bullish looking chart, one of the bullish looking charts in the Magnificent Seven. That cup and handle from 273 to 317 towards 360. NVIDIA also potentially could be forming, call it an inverted head and shoulder with that neckline at 214. This is the left shoulder, this is the head, and then a right shoulder, and then the breakout measured towards a 236 to 238, which could retest that May high. And Microsoft potentially at a W-shaped double bottom, near-term cup and handle, that breakout above 406, if we do get a bullish earnings from Microsoft, could take us towards that 466, and that breakout further could take us towards 582. Good luck investing. We'll talk to you next week. Be careful out there. Thank you so much.
We are not registered investment advisors and encourage our users to consult with their financial advisors before making investment and trading decisions. Nothing contained in our content constitutes a solicitation, recommendation, endorsement, or offer by us at Chartsarefun or any third-party service provider to buy or sell any securities or other financial instruments in this or in any other jurisdiction in which such solicitation or offer would be unlawful under the securities laws of such jurisdiction.